Today we're diving into one of the most fundamentally and powerful strategies in trading, which is trading the trend. Whether you're a seasoned trader or just starting out, understanding how to trade the trend can significantly boost your trading performance. So let's get started. So first things first, what do we mean by trading the trend? So simply put, trading the trend involves identifying the overall direction of the market and making trades that align with this thesis and with this direction. So this strategy works on the principle of essentially the trend is your friend, meaning that markets tend to move in persistent directions, and trading in the direction of the trend increases your chances of making profitable trades. Okay, so looking at this chart here, this is an example of an uptrend. So you can see we're making higher highs and higher lows. So if we're trading an uptrend, our job as a trader is to identify these higher low areas, and we're looking to buy these pullbacks if we believe that the trend is in an uptrend. Okay, next we have a sideways market where price is simply just range bound and we're not moving in an uptrend, we're not moving in a downtrend, we're simply consolidating. And then finally we have a downtrend where we're making lower lows and lower highs, lower lows, lower highs, and our job as a trader is to anticipate where these lower highs are going to be forming, and in a downtrend we're looking to sell pullbacks, okay, and we're looking to take profit as price starts to push further to the downside. So now that's the introduction over, let's jump into some live examples on how to trade the trend. Now let's look at some live trade examples so you can get a very crystal clear idea on how to execute these trend following plays. So first off, what I've done is I've broke this down into a step-by-step system so that you can follow along, and this should be very, very easy to understand. So step number one, you need to identify a strong break of structure. And what I mean by that is you can see here, so we had this fractal high here and we broke strongly above. You can see this price action here. We had a strong break above this fractal high, indicating strong bullish momentum. Okay, so once we close above this fractal high, we can then mark this on as a break of structure. So that just indicates to us as traders that the momentum is shifting to the upside. Therefore, we are entering an uptrend, and it's more likely now that price will continue to the upside. So now that we've identified the strong break of structure, what we can do is step number two, which is marking on the point of interest. Okay, essentially the point of interest is just the area where you're going to be looking at getting long on the market, and we identify this through a order block. Okay, and I think a lot of other channels or other creators often tend to overcomplicate order blocks because they are very, very simple. And simply put, order blocks are essentially the last down candle before the strong break of structure. So I've marked that on in this gray area here. You can see that's from the candle. So the last down candle here, we've marked that on and extended that across. Okay, so this is our order block, this gray shaded area, and this is the area where we're looking to get long on this market. So that's step number two, identifying and marking on your point of interest, and this is simply your order block, which is the last down candle. Step number three with executing your long trade is to enter out of the order block. Okay, so some people want to enter right at the order block, some people want to take 50% retracement of the order block to have a more conservative approach. So you can enter 50% down from the order block, and then in terms of an invalidation, so we've set our limit order, which is 50% of this order block. Invalidation simply goes below the low. Okay, so you can add maybe a couple pips on just to give the trade some room to breathe. And then in terms of a take profit, targeting up at the highs makes a lot of logical sense. Okay, so you can see that's a 1 to 2.6 risk to reward on this trade, which is a very, very good take profit. That's a very, very good risk to reward. Okay, so our take profit is going to be up at this high here. So let's mark that on here. Take profit, target 1 here. And this is where pretty much all of the profit is going to be coming off at the table, about a 1 to 2.6 risk to reward. Okay, so that is a long example. And just to recap, this is step number 1, identify a strong break of structure. Step number 2, marking on the point of interest, which is the order block, the last down candle before the break of structure. And then step number 3, which is setting your limit order and your stop loss and take profit. So limit order goes around the order block. Invalidation, stop loss goes below the low, give it a little bit of room to breathe, and target, the most logical place, is the most recent high that we have just created. So that is a long example. Now let's look at a short example. Of course, a short example is simply just the opposite of the long example. So essentially, step number 1, we need to identify a strong break of structure to the downside. Okay, so understand, here we've broke this fractal low here to this downside very impulsively within a high volume session, within the London session. Okay, so step number 1, we've identified a strong break of structure. Step number 2, we need to mark on our point of interest, i.e. the order block. So that is the last up candle before the sell-off to the downside. So the point of interest is identified in this grey shaded area. This is the area that we're looking to short out of. Okay, so if and only if price comes into that area, then I will be looking to execute the short trade. Step number 3, of course, is setting the limit order and the stop loss and take profit. So the limit order goes around the order block. So whether you take that, at the start of the order block or 50% of the order block, that is entirely up to yourself. Okay, that is a personal preference. However, you set your limit in the market. Your stop loss goes above the protected high. So we have clear invalidation above. Give it a couple pips to breathe, allow that trade to play out. Okay, and to account for any spreads within live trading conditions. And in terms of a take profit, simply down at the low is where pretty much all of your profit is going to be coming off at the table, because this is the area where price is most likely to react from. Okay, so this is a sell example. Just to recap, we've got the break of structure to the downside. That's from this price action here. Once we see that break of structure, we can mark that on. Okay, step number 2, marking on the point of interest from the order block. This is the area where we're going to be looking at shorting out of. We have clear invalidation with step number 3, where we've got invalidation above the high, the guarded high, and we've got clear take profits mapped out down at range lows. Okay, and that is a very, very concise short trade example. Thanks for watching, guys. If you did enjoy this video, make sure to join the Telegram and follow me on X for more time-sensitive and updated trading information. Please give this video a thumbs up and share it, and don't forget to subscribe and hit the bell icon for more trading tips and strategies. Happy trading, and see you next time. Take care, guys. Bye bye.